I guess I'm still more concerned with the stock market and the bond market. I've kind of just mentally committed to owning my house, and whatever happens at this point. You know, I can make the payments on it. It is what it is. It would suck, but like I am sitting on a lot of cash, and I'm concerned at like how bearish I am, given how bearish everybody else is, right? And I'm trying to make a bull case, right? And I am looking at some stuff, and it's kind of crazy, right? Like Facebook is trading at 174. The stock was $381 in September.
Well, it had a big pop in after hours today with earnings.
Back up a little bit. Yeah. So like, are we? Is this going to be something we look back on 10 years from now and be like, wow, we didn't buy Facebook down down 60%. We're all sitting around like waiting for the bottom to quote unquote fall out.
To that point, Stephen, I was looking at Facebook, just like some stats today. Like it was trading at 13 times earnings when Procter and Gamble's trading at like 37 times or something. So like,
well, and you subtract the cash out of there, Eric, and it's even trading at lower.
Oh my gosh, good
earnings,
point.
Right?
So, and this is still a good business. This business like prints money.
Yeah, like I'm struggling a lot because I do feel like we might be getting into the time when like maybe we should be deal shopping. I do see a lot more deals in the stock market though than I think I see in crypto. Like I don't know if Ethereum at $2,900 is a deal.
It's not that cheap.
Like ETH can go down another 50% from here, no problem. But like I have a hard time believing Facebook's going to go down another 50% from here. So like I think the problem with all of this, right, is like we have like a cycle within a cycle, and I think all of us realize we're at the end of this longer term like big boy debt cycle, right?
Yep.
But like timing is really important. It might not implode right now. Like it might implode the next cycle. Like the Fed might have enough room to send this thing back up somehow and soft land the plane one more time. They may have enough bullets left in the chamber to do that. And if we're all sitting here thinking that this is it, this is the big unwind, you know, as the Nasdaq's off like 25% on the year and we're waiting for minus 50%, like we could miss like some pretty crazy rallies. Like if this ends up being like, we're all saying like this time is different, right? But if this time isn't different, if this was like all the other times where the Fed announces a rate hike, the market sort of panics, but then it basically prices in the rate hike and then actually trades up while the Fed is hiking for the most part, and then kind of melts up at the end. Like if we miss that, I don't know, we can miss like 100% move in stocks. We could miss like a 200 or 300% move in crypto. It's really driving me crazy because I see Bitcoin ETH doing 300% from here. I also see it doing like -60, -70 from here if it is, you know, that time. And I don't know. I really am at a loss right now.
For listeners, then, like we don't know where things are going to go, and we're kind of this Goldilocks zone where like risk to the downside, but still upside. So how do you play it when you obviously don't know? I mean, Stephen, you talked about in the Discord about, you know, you're not necessarily looking at how much money you can make, but you're all about managing risk. And I imagine you do that as a poker player. And also, Eric, you know, when you're managing other people's money, that's like a key thing you're taking into account. So is this like an Occam's razor thing where the simplest answer is just to dollar cost average on the way down?
Well, I think there's actually an interesting question here that you've reminded me of. And I was actually thinking about this yesterday. Is there actually a good reason for normal people, i.e. non-professional investors who spend all their time thinking about markets, is there any reason for people to hold cash? Like, especially like right now, right? like any cash at all? Is it, or like more than 10%, right? Like realistically speaking, we're looking at the market way down. Everybody's max bearish. The sky is falling. Crypto's down, it at least retraced like over 50% from highs. I think still today is like close to 50% from highs. Some coins are down 75%, some coins are down like 90, but like even so there's some decent coins down 70, 75%. Like should normal people just bite the bullet and just buy because we're down a lot and it might be the bottom, and if worst case like 5 years from now, 10 years from now it's gonna go up? Like is it even worth thinking about, I guess?
Well, I mean, Steven, you posted in the Discord two things, like stable coins as a percentage of total crypto market cap is going up, meaning people are going into more stable coins. And then DXY, the dollar, is on like this parabolic move. And so basically people are finding safety in the dollar, and maybe that's the only good reason they have. And so it's happening. The question is like, will it break trend and people stop, holding the dollar as like this safety asset and moving into stable coins like we've all done recently? Outside of that, I mean, like at least stable coins can offer you like a decent damn yield, where I don't know what you would do with actual fiat, like what are you gonna do with that? You're gonna lose 8.5%.
More.
Call it like
losing more.
You're gonna lose like 1% a month, maybe.
It's more like it might actually be 15-20% right now. It really is just a gigantic clusterfuck, right? It's like, okay, well, you hold on to this cash and it's gonna lose. Like the government's telling you it's losing 9%, right? So it's probably losing 20. And I think if you take a look around you recently, gas prices, home prices, healthcare, tuition, like all this stuff is insane, right? Like your money's melting away. But also everything is going down, so it's making like the cash look pretty good. I can't imagine just sitting around. I mean, I guess I can because this is what I do all day. But like as like a normal person, just sitting around thinking like, what the hell do I do? I think at this point you just capitulate, right? Yeah, it could go lower, but even if it does go lower, like I think it'll go up by the time your retirement rolls around anyway. And like, what are you gonna do? Sit around and try to pick the bottom? Like I was looking at our boy Ben Cohen's like risk metrics for the S&P, and he's usually like going all in and like the 0.7s, like 0.78, 0.79. It was like 0.49 the other day when I looked at it. That's insane.
Is it really?
Like,
wow.
That's like that was around like the COVID stuff, right? So yeah. which is like a longer term thing, right? He's looking at that on these very long horizons. Obviously the next 3 months, like sure, we could go down way more, but like if you zoom way out, unless you think the world is just absolutely going to explode and we're going to go like Mad Max, it's like getting to the point where it's worth considering, I think, just getting.
Can I share some numbers with you guys? I saw a chart today from it was S&P returns from 1978 through 1982. This was like the hyperinflation, like Volcker era, and during this time, inflation went from like 6.6% up to it spiked up to 13.3%. And then they rose Fed funds rate from 7.9% up to 12.9%. So that they combated inflation by using the Fed's fund rate.
Well, I mean, Volcker, correct me if I'm wrong. I think at one point he jacked it up to 20%. And that's from like an average of like 11%. So like towards the end of his part, and it definitely created a 2-year recession. Like it's not like unemployment also shot through the roof during that time. And so,
I mean, the Fed would do that today if it created a recession.
Well, here's the S&P returns
for sure.
In 78, 6.6% positive. Like these are all positive. In 79, it was 18%. In 80, 32%.
What are you quoting? Sorry.
S&P 500 returns, like on a percentage basis.
Okay.
And then in 81, it actually went negative 5%. But then 82, positive 21%. 83, positive 22%. So I guess the point is, it's like what Steven's saying, like it can look bad and like prices, like the market can go up.
So DCA in, right? Like, DCA. I mean, like
hold.
Like
Just hold
in
good
theory,
assets.
like once the market prices in all the information, like we should go up after that, right? If it like truly, if it prices in all the bad news and there's no more unknown bad news, like yeah, it makes sense why you would have these like dramatic drawdowns, but then after that, you're just good and you go back up again. Like if there's no more surprises. The problem with the world today is like there are black swans. I don't even know if they're black swans. They're probably like gray swans at this point, right? Like the food crisis is going to be a doozy, right? We may end up in a situation where you've got countries like Sri Lanka, right, that are just like we can't afford to feed people, so we're just going to default on our debt, right? Because otherwise people start like people might be making those choices. Like the US and the Western world is going to be the bidder of last resort for like and set the floor price for all the food, right? Because for us, like even if our cost of food goes up 10x, it's still actually for a lot of people in the US, it's not going to completely impoverish them, right? It'll be brutal, but like versus like other countries, right? They literally they'll just die, right? In the US, people will have a hard time, but people can substitute. They can move to smaller places. They can sell items they don't need. They can do all sorts of substitution to pay for food and to pay for energy, right? But like we're already scraping the bottom of the barrel in some of these other areas. Like people can't go any lower. They can't pay any more for oil. They can't pay any more for gas. They can't pay any more for food, right? So that's something that may run around like later this year, next year, because there's this delay in like the wheat planting seasons, right? And we also have this energy crisis going on where, you know, outside of the US, where thankfully we're basically energy independent, but a lot of other places aren't because they, in a lot of areas, have sort of pursued this utopian sort of like green energy policy that was a little just completely didn't take into account the realities of the existing world, right? Can't just like flip a switch and suddenly all of Europe's powered by solar just because we think it should be that way.